All right, let's from Twitter to markets. Recapping yesterday's massive market performance as the S&P 500 gained 5.5%, the largest increase since April 2020 and 15th largest since 1950. And Brad, we mentioned at the top of the show at the big board, all triggered by a consumer price index that was still high in the broad scheme of things, but slowing year over year. Market latched onto this and really reading through that perhaps the Fed pulls back on rate increases in the early part of next year.
15th best day for the S&P 500 in terms of a daily gain in this 1950 to 2022 time span. And that move higher that we saw of about 5.5% for the S&P 500, all of that jump, as we were showing at the start of the show, it was triggered by that report. And what it is notable to kind of mention within this and the entire context comes back to how the Fed is going to think about this. Now, there is still the reality that Fed Chair Jay Powell could kind of lean more towards the late Billy Mays and say, but wait, there's more in the terms of rate and in the terms of exactly in the terms of some of the rate hikes that they may continue to move forward with. So it really is just hoping that you get more readings like this sequentially and even over a longer term that creates a trend that the Fed is looking for.
R.I.P. Billy Mays. That was just an icon of the airways. But noting this, over 22V Research, Dennis DeButcher, really one of the best market forecasters in the game. He's noting that this pullback in CPI, and it is likely to be followed by further decreases or a slowing rate of growth in CPI. He sees the S&P rallying to 4,200 to 4,300 potentially pretty quickly. Very interesting.
Yeah, absolutely. We've been tracking some of the major sectors actually that were jumping the most yesterday. And of course, who was it? Yeah, consumer discretionary and technology. Why? Because if you see over the course of the rate policy pathway that the Fed has kind of moved forward with, if you have the absence of easy money policies, who's going to get impacted the most? And Julie did a wonderful morning brief right up on this a couple of weeks back. Technology gets hit the hardest. And so within that, we're going to see exactly where that sector continues to rebound, and perhaps on the consumer side and the discretionary spending, then it is annexed to the XLY. Exactly what that means for some of those companies if consumers do feel more confident about prices starting to trickle down a little bit more.